Yes, hello. I'm Mark Child, Chairman and CEO of Condor Gold Plc. We're AIM and TSX-listed, and we have 2.4 million ounces of gold in Nicaragua. The project's fully permitted to construct and operate a mine, and we're also looking to demonstrate a 5 million ounce gold district.
Mark, lovely to have you on board. How are you, sir?
Well, thanks.
Good. Surviving. You're in London, aren't you? You're near me.
Yes, I am.
Very good. Hey, well, look, there's a story that I have sort of dipped in and out of over the years, but have never really sort of sat down and talked to anyone from the organisation about it. So very pleased that you've come on our show. So thank you very much for that. Nicaragua, there's a few people who understand Nicaragua, a few people who don't. Do you want to sort of talk us through that as an investment jurisdiction or a mining jurisdiction?
Yes. Well, let's take both of those. Well, firstly, as a mining jurisdiction, it's the right address. I've been operating there for 15 years. I went 15 years ago. I've been full-time CEO of the company now for 10 years, and I go about 25% of my time is actually in Nicaragua, and I'll be heading out there this weekend. So gold is the number one export last year for the country, which might surprise people. So when I first went there, it was about number 7 or 8 export. There are 5 now commercial mines in the country. And there's also an artisanal mining community. So the government's been permitting everything. You can own 100%. So unlike a lot of Africa where there's 20, 30% free carried interest, you don't have that. So that helps your project economics. You get concessions for 25 years. So you've got an exploration and exploitation concession tied up in one for 25 years. The government also helps out on certain issues when you're in mining. So there have been cases of some community challenges or land acquisition challenges, and the government's actually gone behind the scenes and worked with the company on those. It values the taxes and the exports and jobs that are created. So in terms of mining, it's the right address, probably the best address, one of the best addresses in actually Mexico, South America, and certainly within Central America. And you've got to be very careful where you're going, because some countries actually don't even allow mining in that part of the world. So, and it's a bit of a maze when you're looking from London out there to work out which countries you should and shouldn't be investing in. So it's a good question from that perspective.
Okay, right. And so some of the bigger names, you've got Rio there, etc. Again, are they doing anything? These are producing mines. We're saying they're producing revenue for the country. It's the biggest export. So genuinely, yes. No concern.
From an address of actually mining and getting on with it, fine. You then got politics, of course. So in politics, let me just touch on that, because the headline, we've got presidential elections again this November. We have the President Ortega standing for a 4th term. That, unfortunately, sends negative signals to people, because there will be allegations, and probably correctly so, of lack of free and fair elections. Recently, there have been arrests of a few opposition people. So in terms of the political risk, yes, there is a political risk associated with it. And you could argue that's why we're valued quite cheaply at the moment, and that's in the share price. Everybody knows it, the headlines are there. There are sanctions by the US against individuals within Nicaragua, i.e. the senior Sandinista people in Nicaragua. So that isn't a risk, but it's, and in some ways, the party there does control most organs of state. If you like, the military, the police, the judiciary. There's not a free and fair press, unfortunately. That, having said that, that's also the case in China. The Communist Party of China is a dictatorship, and so, but it doesn't stop people actually doing business there for many, many years, and lots of foreign investment goes on. So I think as long as you, within these authoritarian regimes, as long as you understand what the rule book is, you can operate there. It's not our job as a mining and exploration company, development company, to actually, we don't get to vote on, we're not there to vote on the politicians, if you like. We're there to run a business and to look at the local law and can we operate there? And I believe we can, and so do half a dozen other foreign companies operate there quite successfully. The currency is fully convertible, so unlike So you can pay dividends, you can repatriate capital, unlike, say, Argentina and other countries where there are foreign exchange controls and you can't repatriate capital. So that's also an important thing to consider.
I'm fascinated by the jurisdictional. There's been a lot going on with regards to South American politics at the moment. We've seen it in multiple countries, Mexico, Chile. We've seen it up in Peru recently. Elections create a narrative which is not conducive to international investment. It seems to me. Is it a case in Nicaragua of better the devil they know than maybe a more sort of socialist government coming in? I mean, how does the international investment community view Nicaragua in your view? Because at some point you're going to have to go to institutions and get investment, and they're talking all things green, all things ESG, and they've got to be, everything's got to be, tick box exercise. So, what's that mean for you in the future?
Well, in terms of all things green and all things ESG, that doesn't stop us doing all that. We're proud to be London listed and Toronto listed, and I provide the leadership, and we'll do everything to the IFC performance standards, Equator principles, and we do huge amounts. And we want to be a beacon for the way things should be done on the environmental and social. So we want to set a new standard as we have this mine permitted for construction and be an example, not just to Nicaragua, but to the players in the region, that this is the way to do it. And we've just put in water projects. We have tree nurseries. We're spending $20,000 a month on the community. We just put a water project. We put in for over $200,000 US. So it doesn't stop us. That's leadership from us and what we decide to do in the company from an ESG perspective. And actually, in Nicaragua, they have a Ministry of the Environment, and we have the environmental permits to construct and operate the mine, and they do 16 different technical studies. You do what's called you apply for an ESI, an environmental social impact assessment, which then applies for the permit. And those technical studies cover all aspects of mining. Half are technical, like geotechnical, water, but the other half are environmental. In Nicaragua, they are producing 75% of the electricity is green electricity. It's geothermal, wind, hydro. They don't have oil, so it's one of the highest from that. So environmental, that sort of can all continue. In terms of the risk appetite for foreign investors and institutions as we go into the construction phase and raise money for that in due course, most in terms of the debt side, that tends to get secured against the asset, and we've got $2.4 billion of gold, 2.4 million ounces of gold in the ground, so close to $4 billion in situ. And so the debt, whether it's private equity debt or bank debt or gold loans, tends to get secured on that. And then there are offtake agreements. So that's the same in the Congo and places where Mali, where you've had 2 coup d'etats in the last 12 months. It doesn't stop the financiers actually lending to this, because gold is a $8 trillion currency, which you can secure against future revenue streams on. So, and I think it comes down to how does the economics look at the project itself? What are the IRRs? What are the NPVs? What are the cash flows? What are your break-even all-in sustaining cash costs? Can you repay the debt? And so I think the financiers will look at that aspect first and foremost. And I think the riskier the country you get, you probably want to have a quick payback on that. So you don't want to have a 5-year payback on your capital. You want a 12-month or 18-month payback, which we'll be demonstrating when we update our studies next month.
Okay, I guess you've I guess partially addressed the point around the politics and future investment, and in the sense that yes, with the debt, securing it against the asset or asset level is fine. Perfecting security, if something goes wrong, that's a different matter in different territories, right? So I guess the proof will be in the pudding. As to can you get it financed? Or are you going to have to pay some kind of punitive coupon on that for it being Nicaragua, i.e. the cost of money just got more expensive for you? But that's a ways down the line. But I just wanted to say that's why I use the phrase, is it better the devil you know for these investors?
Well, let's look at 2 examples. Macu Mining, which is TSX listed, has just commissioned and first gold pour on a brand new mine in Nicaragua, and they did that 2 months ago. So there's been money there to finance that and build a mine of about 500 tons a day. They should do 40 to 50,000 ounces of gold here because it's very high grade. In 2018, so 2 years ago now almost, Calibre Mining acquired B2 Gold's assets for $100 million, and they finance that via a straight equity placement, so no debt. So there's an example, or there's two examples, one of mines, one having just been built on the construction finance and operating, and the other one with an acquisition, despite the politics, if you like, or in spite of the politics. But yes, it gets more expensive in terms of coupon. Yes, we'd expect higher interest rates than if this was, say, sitting in Canada.
Right. I just want to address the point because it's still talked about in chat rooms. Okay. So, as I said right at the outset, some people understand doing business in Nicaragua and some don't. They're a bit nervous about it. But
Yes.
I think you've addressed that. So should we talk about the projects proper? Because I do want to sort of dig into the detail about what the plan is going forward, because there's a lot of studies going on. There's, you've got open pit, you've got potential of underground. I want to understand how that all comes together. And when you make those decisions, like the route forward. So can you talk through the projects, please?
Yes, certainly. Well, the strategy is to construct and operate the mine. The big signal on that is that this year we've actually bought the mill. So we bought a brand new SAG mill off First Majestic Silver. We paid $6.5 million. We issued $3 million of our paper for that at 50p, and the share price today is around 44, 45p. So it's like premium to where we are. And the balance we paid in cash. So, and that mill is made by Metso Outotec. You might know they're in Finland, and they're the Mercedes of the mill market, the crushing and grinding equipment. So that's a whole new package. So it's the motor, it's got a variable drive on it. To give you an idea, it's 24 foot in diameter, 17.5 foot long, and that can process 2,300 tons a day. Now, half of that, all items are coming into Nicaragua. We've instructed the shipment of everything. We've cleared about 9 at the moment into the country, 9 separate container parcels and packages, and we're in a warehouse. So that's a big signal to the government, that we got the mill, we're serious. And we're doing the site clearance and site preparation. So we're really painting a path for the construction phase. And ahead of that, we're also doing, we're going to release in 3 to 4 weeks a PEA, which will show different scenarios of what the project can do. And we'll show a total open pit scenario from 4 open pits. And then we'll show that plus underground. And then we'll, on the main pit where we have reserves, and reserves are the economic part with all the geotechnical studies and the hydrology, we'll do an FS level or a bankable feasibility study on the main pit, which will finance the project. Now, in terms of numbers, out of the main pit, we'll produce over 600,000 ounces of gold. And on our PFS, it was 670 all-in sustaining cash costs. And that's lower quartile globally. We've got a 3 gram pit, so it's very high grade and very economic. Back to the economics. And if we add the 4 pits together, we'll produce about 900,000 ounces of gold. And if we add the underground in, we've got another 1.2 million ounces of underground. So we can layer in those productions. So as we go forward, we'll do a 2-stage to ultimate production numbers. We'll do stage 1, which will be a minimum capex, maximum cash flow, based high grading things, quick payback, based on the mill we just purchased. So that's stage 1. And then after a couple of years, we'll expand that. So we've appointed an engineering firm that's doing the FS level designs, and they should be with me this month, fully engineered, plus or minus. So I get a new capex number, because you'll probably say to me, what's your capex? And I'll say, well, I'll have a better idea by the end of the month when I get the number. But it'll be laid out so that we can double that capacity of the plant.
Okay, so why is it taking so long to go from PEA, around 2014 through today, PEA again? What's happened during that period?
That's a good question. We put in December 2014, we put a PEA, 2 PEAs out and a PFS. So the PFS or reserve was on the mainland, your open pit. Gold at that time was around about 1,400, and it dropped down significantly. So your readers should bear in mind that gold peaked at $1,900 an ounce, and it dropped 42%. So anybody watching this should say, do I want to be in gold? Because if you think gold's going to drop another 40%, the last thing you should do is buy Condor shares or any other gold mining. All bets are off. Everything, gold price goes down 40%, the shares will probably go down double that across the whole sector. So that's one thing that happened. We entered a chronic bear market for our underlying metal, both gold and silver. We then in that period said, well, there's no point drilling this. We got 2.4 million ounces. We got reserves. It's economic. There's no point drilling this and getting it to 3 or 4 or 5 million ounces. You've got enough ounces. Prove it's economic. Prove it's. Can you get it permitted? Because ultimately, the real value is, can you get it out of the ground? Back to your question about the address. There are many projects around the world that have got ounces and reserves, and PEAs and PFSs that are never going to be a mine because they can't get a permit to extract it. And I don't think the market's given us credit for that. So we then went ahead with the permitting and these applications to the permitting. We put the first batch in 2016 to apply for the main pit to be permitted. And we had a setback. We were told by the government that we could resettle a nearby community because this is a former mine. It mined over 500,000 ounces of gold in the 1930s and the 1940s and 50s. It closed in 1956. So we were told we could resettle that old village, which had 40% poverty in it and a very, very poor community. We then ran into people not wanting to be resettled, and our public hearing, we ended up with a demonstration there. And so we had a setback. So we had to go back to the drawing board, redesigned everything for no resettlement. So we shortened the pit by 20%. We lost 8% of the gold in the pit. We're putting a big berm of a barrier of 5-10 meters high between the pit and this community. And we then reapplied for permits again, changed the senior management. So I got a mining engineer from the nearby El Limon mine, it's an hour drive away, who's Nicaraguan. Absolutely emphasized on our social license to operate and lots of programs with the community, which we hadn't done enough on before. And then we got the main pit permitted in 2018. So in August or so, 2018. So we had a setback linked in with the permitting process, but we've corrected that, and that's all sort of behind us now. And in Nicaragua, when you put the permits in, you can do all your technical studies, then you take it to a community, and you have 500 people attending in the local community, and then they will vote, do they want the project or not? So you've got to take the local community with you. And that didn't work for us the first time. So that's one of the reasons why we had these delays. And since we got the permits, we then permitted additional pits to make it bigger. So we now have 1.12 million ounces permitted, and the last permits came through last year. And the permitting can take a couple of years, and that's just part of the technical studies and the environment, these 16 studies that go in, and then the discussions with the... So once you had those final permits, we're then doing the Western now, if you like, bankable feasibility study, so that the banks can see, will lend, or private equity or banks or gold loan companies will lend on that study, and so that's what we're doing at the moment.
Okay, I made reference to it earlier. I just want to understand what the plan is, because from the paperwork available, it's you're keeping all options on the table at the moment. It seems to me. Is that right?
Well, we're going to construct the mill at 2,300 tons a day. So we built a mill, so we don't have flexibility on it. In other words, as of buying that mill, there is a hard line. We size the mill. It's not going to be 4,000 tons a day to begin with. We could do that on our PEA, on the bigger PEAs. We're adding an underground, but we're not. So we sized the mill at 2,300, and the capex will be around that. So if you'd like, we bought a big SAG mill. We now have to doing the engineering to the primary crushers at the front. So everything before that and everything after it, the tanks and the gold room. What's the cost of all that to make that work? And that's the study we're doing right now on fully engineering this. And that includes not just capex, but the designs to the FS level. And so that's the strategy, and that'll produce about 100,000 ounces of gold a year.
Right. Okay. What's the timing on making that decision?
That decision's been made.
No, but I meant in terms of, you said, all right, we've got the mill, right? Yeah. We've got to then finance the front end and the back end. We've got to then feed that. You're talking about 2.4 million ounces. I mean, how does that 2.4 million ounces break down in terms of feeding into the mill? Because these studies will be looking at the M&I component, not the inferred component. So
Yeah.
That's what I mean. In terms of decision making, you're still not quite there in terms of the numbers, are you?
Well, we are. So the 2.4 million ounces breaks down at 1.2 million open pittable and 1.2 million underground. We're not mining the underground. Of the 1.2 million open pittable, we permitted 3 pits, which contain 1.12 million ounces. 1 or 2 small pits we haven't permitted, but we've got 90% of the open pit material is permitted to extract. Of that 1.12 million, you said measured, and 80% is in the indicated, the higher category, if your readers indicated, and about 20% of it doesn't mean to say, but we permitted them, even though 20% is in the lower category. The government doesn't separate out and say you can only take out higher drill spacing material. So all that is permitted. And also the mine site infrastructure is permitted. So the tailing storage facility is permitted, the plant's permitted, the water's permitted, the power's permitted, all the roads and everything else are permitted. So we have a fully permitted mine on the project, and we've sized the mill to produce 100,000 ounces of gold a year from those 3 pits. But then the question comes, how are you going to finance that? And we finance it off the main pit. So the Landia open pit has 80% of those permitted ounces.
Right. So it's got 80% of 1.12 million ounces on the open pittable component.
That's right.
Right. And you think that's going to be enough to get you, because that's where it's going with this. Is right. How do you get it financed? Yeah. Because you're talking about 2.4 million ounces, but 1.2 of that's underground, and you've got a bit of work to do on that, right? And is that all inferred? Yes, is that all inferred? Absolutely. Or it's about 3/4 inferred, right?
The underground, correct. And that's right. The underground, we haven't drilled out. It's very expensive to drill out underground because it's basically there's 1 million ounces beneath the pit. So it's much deeper drilling. And we'll do that at a cash flow once we're in production.
Right. So the bit I want to hone in on is the bit that gets you financed, which is it's open pit, which is good. It's, what is it, 3.3 grams, which is good. And 80% of that 1.12 is what you can get financed on, which is enough to get you financed. That's what I'm hearing.
Yes.
Brilliant.
Yes.
Fantastic. So I don't need to worry about you getting this.
Well, I think the banks will actually do better than that. I think what will happen is we will give them full mine schedules,
right?
Quarterly mine schedules, which we're doing right now, which are very advanced at this stage. And they'll look at that and say, yeah, we'll give you all the indicated, the 80% that's indicated within those pits. We'll say that's there for sure. And the other bit that's there, we know that's going to be there. We might have to do a bit more drilling. But there's a probability matrix around it. They're not going to give us nothing for that extra 20%.
Exactly. Well, it's where it's going, 20%. Which is like, have you got enough money to do that infill drilling to bring that 20% into the M&I?
Yeah, the project gets financed even without that. The economics are so strong. Okay, so we've just completed 3,700 meters of drilling, and there'll be an announcement on the final drill results very shortly in Landia open pit. So the main Landia open pit, which I've discussed, which is a project maker, is 900,000 ounces on our last number, and we're high grading that. So we're taking the highest 10% near the surface, which works out at basically 60,000 ounces at a higher grade, about 4.2 grams. So we've just drilled that with and around it for 3,700 meters and had some fantastic drill results. So that's now shovel ready. So that's ready. That's the last drilling that we need to do ahead of extracting it. And that gives you your first 6 months mill feed, basically.
Right. So high grading can be a good thing or a bad thing in terms of over the life of mine. So you're getting the good stuff early and getting some cash flowing early, which is good, yes. But later on it has an impact on the grade, right? So how much of that is going to be at 4.2? What's the number of ounces?
It'll be less than 10%. So, on our numbers, we have about 445,000 tons at 4.2 grams per 60,000 ounces of the main pit. So it's less than 10% of the main pit. And of course, what we do is, we're businessmen. You want quick payback, and you put the higher grade through earlier to pay back the loans, and the bankers are happy. And back to my point about Nicaragua, it's much more attractive. We can pay off the loan in 12 months. We should do that. I mean, it costs the same to process an ounce, whether you're putting through, bear in mind, a gram of gold is $60. we talk grams per ton. So 3 grams is $180. 4 grams is $240. We're $260 a ton, and it costs the same to move that ton and process it. Whether the gold in there is worth $100 a ton, or whether the gold in there is worth $260 a ton, the price is the same. So of course you're going to put the higher grade through early to pay back your debt.
Okay, you mentioned a number. You mentioned the ASIC earlier on. Obviously, there have been previous PEA, and even a PFS. One is what might be there, and the PFS is what should be there. But how much met work is being done? What do you understand about the recovery rates, dilution, all of the above, to be able to say, I've got some degree of certainty that this thing's going to be circa $700 ASIC?
Yeah, the ASIC is PFS level ASIC, which is good. We've subsequent to that, and that's 2014, so it's reserve level. We've since then done different met tests, particularly hardness of the rock, which is the BWI index and the abrasion indices. We currently have 1,000 kilos of rock sitting of core, gold core, if you like, drill core, sitting in a lab in Canada near Toronto with SGS Lakefields. And that takes us up to an FS level metallurgy. So that's the standard of met that's required for the banks to lend you money. Those lab results are due at the end of this month. We're 91% metallurgical recovery. And we're getting weekly reports. Actually, I had one this morning from the lab saying we're doing this. There are no negative surprises. The other thing that you can look at is the historic mine. They actually managed to get the gold out of the host rock for 15 years and produce 500,000 ounces of gold. So metallurgy is not a problem, but it's a good question, because one of the fatal flaws in mining can be if it's refractory ore, how complicated is it to get the gold out of the host rock. This is dead easy. It's a standard crushing, grinding CIL plant.
Right. Okay. So we're open pit. What happens with the underground component? Because you were keen to bundle that in to the 2.4 number there, but the reality is the work hasn't been done yet. It is more expensive, and because it's underground. When do you start allocating capital to that, or is that not for now? Let's get this thing up and running, get some revenue going, and then we'll come back to that at some point. When do you make your mind about how you come at this project? We
spend our money doing a minimum capex, maximum cash flow to get this up and running and having cash flow, and use the 3 permitted pits to do it. And we don't attack the underground until we're in production. Okay, makes sense. So it has a value, and what we'll do in 3 weeks' time is we'll put out a PAB, if you like, that says what could this do if we added the underground in from day one, just so that our shareholders in the market could answer that question. If money wasn't a problem and you could throw it at the project and we could raise it, what could it do? And the answer to that is it'll be near 107. You could add in probably 50, 60,000 ounces of gold a year from underground. And we're doing that study right now. We're updating that.
Okay. Yeah. I think it's always important for people watching to say, right, a PA is what the company's saying. This is what it might be. PFS is what it should be, and the feasibility study is what it will be, right? So those are the way I think about it. So, okay, I understand how you're allocating your capital now. How much cash have you got today? Remind me.
We just put our interims out. We have about 3 million sterling.
Right. So what does that take you through to? You're going to be out talking to the market now and saying we're a bit closer to production. Give us some money.
Exactly. We'll need to have a financing before the end of the year. I don't want to put a timing on it, obviously. But yes, we will need to come to the market before the end of the year.
Right. Okay. Gold market's come off a bit in the last 3 months. Doesn't really help the conversation. I think your share chart's done pretty much what most companies have done recently. So you're going to have to time that, right?
Yes, we will. We've got strong shareholders. We should just say that we have... the directors have 22% of the company. That's Jim Mellon and myself, and not many people have at this level of a £60 million company where the directors have got significant skin in the game. So we do concern ourselves with dilution and creating shareholder value because we're the shareholders and everyone's backing us and having a ride with us. So, and we've got a lot of contacts, a lot of friends in as well who supported us over the last 10 years. So we're very mindful about trying to create shareholder value. And I don't say that glibly. I bought 4.2 million shares all in the market over 15 years. I haven't had any free carried interest on this. Everything has been purchased in the stock market over a long period. So I'm totally motivated to create the value for the shareholders. Obviously, myself amongst them, firstly and foremost. And so yes, we will have to go to the market. The directors on the next financing will be supportive of the financing. We'll put our money where our mouth is again.
You should, because if I look back from when you joined, 10 years ago, right, 2011, and then you kind of you really hit quite a dodgy period for gold. Obviously, I think 2012, 13, it really dropped off, as you mentioned earlier. Yeah. But the share chart doesn't look pretty. You got a bunch of catching up to do, because you've had the comfort of being paid.
That's right.
You've had the comfort of having a salary. Your shareholders have been on this ride. So the catching up, are we near this point where you can actually start delivering this value? The company is going to start producing. You are going to get back up to the dizzy heights of where you were 10 years ago. Is that the plan?
I've taken the view that you create the value within the company, and the share price should take care of itself. And as a former banker, which you said you were, and an investor, that's the way to run it. I could sit here pumping the share price and giving false dawns and whatever. That doesn't do me any good or the company any credibility. So I think the value creation on this has been getting permits. Now, the market might not have recognized that, but a project's worth sod all. If it hasn't got a permit, you can't get the gold out. Okay, as go and look at half a dozen projects in Canada, let alone a frontier market like Nicaragua. We have had political risk, and that's just a frontier market thing, which I accepted when I invested in the company, and other people should too. You're told one thing by the government, the resettlement's going to be easy, and the next thing you might have people objecting because they're financial opportunists, and even if you give them a new house and new electricity and new double the size of everything, give them much better stuff, they might not want it. So the local people actually want to live by the mine because it's their mine, their grandfathers are in it, and they want the jobs off the mine. If they move out, somebody else moves in and gets the jobs near the mine. This is what happens in a country where the per capita GDP is the lowest in South America. It's $1,912 per capita GDP. The entire GDP of Nicaragua is $13 billion. It is a low per capita base. So you're dealing with a risk. And we had a 2-year setback with that permitting. 2018, the politics, as you know, there were 320 people killed in Nicaragua, tragically. There were 57 students shot over a 5-day weekend. Well, that sets you back. And our share price has doubled, I would say, from 18 months ago. We did a financing last year at 22p, and so we're double that. So it's not all doom and gloom, but it's tough. I would say the project operationally has never been in better condition. So we bought all the land, and we spent over $4 million buying all the land. You can't build a project without having the surface rights. We've had to buy land off over 60 landowners. We've had a very good team of 4 lawyers working on that.
So that's completed now. The land problem's gone away.
It's about 97% of the land's purchased. The rest of it, we had prices from 5 landowners who are holding out, and we know their price. If we wanted to, we could settle it tomorrow, but we don't want to. We don't like overpaying for things but we'll get the land. The land is a non-issue. It's a non-risk for us. And we've been running the company for 12 months as if we have 100% of the land.
Okay. Well, I guess that's good news. And so we do know the sort of quantum that you're going to need to raise. Like, it's obviously to cover the capex, a bit of G&A, and a bit of I don't know leeway if things go wrong.
I think we will raise before the end of the year, or over the next 3 to 4 months. We will raise some money. The FS study is not going to be out. It'll be out maybe around the end of the year or 6 months. And so in terms of the bank debt, we have to wait for that to actually happen before we can say, here's our document, here's the plus or minus 50% capex, and here's the FS. We can't raise money, the construction financing. So to answer your question, I see the financing in 2 stages. Right, one element which will sort of timing-wise sees us through for the FS and the finalisation of that and beyond, and some headroom. And then the main construction financing is more likely to be next year.
Right. Okay. Small amount this year, tide you over until FS, puts you in the position to have discussions. And therefore, okay, coming back to my point about you've got to time this right, potentially gold is doing something a bit more than it's doing at the moment. I mean, you've got to have a long-term view on gold.
Well, I think the project economics, I think, are going to drive it. So we will be putting out again PEAs again, updating it, because the last time we did a PEA was at $1,250 gold price. We can legitimately do them at $1,550 now to bring it up, and we can do it on permanent projects. And the projects change materially in the way we've redesigned everything. But I think when people look at those numbers coming out, it'll be highly attractive, the project, from an NPV perspective. And there's two ways to value these companies, you should know: a discount to NPV and ounces in the ground. Well, we're probably a bit of a combination, because we're fully permitted and we've got a mill and we're clearing site and we've got all the land and we've got all the permits. This is turning into a absolutely shovel-ready project. And you can probably look at, there's probably 8 to 10 projects around the world that have got these grades, that are fully permitted, are almost completely de-risked at an operational level. There's nothing to stop this happening from an engineering perspective. So we don't have any fatal flaws in water, metallurgy you mentioned, geotechnical you mentioned, trying to stop this actually being built from an engineering perspective. Where there are fatal flaws in other projects, the met's wrong, there's no water. So that creates great value, I think, by having something completely de-risked from a construction and operation perspective.
Yeah, it's getting to the. I know I use a phrase you used in the PowerPoint, which I was like, "Oh, is that right?" Which is shovel ready, and it's like you're moving towards being shovel ready. I think the feasibility study will perhaps more readily allow you to use that phrase comfortably. Okay, so this story is. Well, it's a short runway, short time frame to actually being able to start having conversations with banks, or are you trying to get ahead of the curve there as well?
Yes, we're talking with banks at the moment. Banks do take a long time to make their minds up, and they want site visits and so on. So we have spoken to a number of banks.
Right, and they're saying what to you? See you around the feasibility study stage, or are they going? Actually, we can get comfortable with lots of the moving parts, political risk. We can use the PA, give us a sense of what this is about. We'd be interested to talk to you, or is it just? Well,
the PFS the PFS doesn't become obsolete, incidentally. So we have reserves, and we have a reserve number there, but we're just trying to update everything on what we know. The other aspect is that since the PEA, we found another open pit, so that's changed materially. Don't forget, we're not selling a village, so you haven't got that capex. We bought the mill, so you're minus that capex. We bought $4 million worth of land, so you're minus that upfront cost. We've moved the plant 1.2 kilometers away. We've eliminated the south waste dump. We've changed a road that we're going to relocate and a power line. So in terms of materiality, because we're Canadian listed, we're at a point where the project's changed quite a bit. And so we need, under the regulations, to actually update the project for the current state of knowledge, because a lot's happened in the last 6.5 years.
How do you grow this thing? Because 1.12 million ounces is the bare minimum, right? I know you've got the underground and you can move to that, but in terms of the open pit portion, how much exploration drilling is going? Oh, you're going to be doing some infill drilling, but are you going to also be looking at some exploration drilling to increase the size of the resource with the open pit component?
We spent the 80% of the money is going on the strategy to construct and operate the mine, because that's capital intensive. The other part of the strategy is to demonstrate a 5 million ounce district. So we've completed about 3,600 meters on the Cacao vein, because this system is, when we say 2.4 million ounces, it's not just sitting in one place. There are 7 different deposits, and all of those can be expanded either by drilling down the ore shoots. So to give you an idea, under the 3 permitted pits, we can, just in that area, we think we can add 900,000 ounces. Why haven't we done it so far? Well, some of it's deep. It's underneath the underground, which is beneath the pit. So it's expensive to go and drill 400 meters down. So, but is it there? Yes, it's all open. So could we pull the underground mine plans down by another 100 or 200 meters? There's every possibility, but the only way you'll really know is to drill it and see if the results come back. So we've got plans to develop this. We've doubled the land package as well in the last 7 years on the project. So we're up to 580 square kilometers of all adjacent and contiguous concessions. We've got 2 major regional faults. So we've flown in helicopter-borne geosurveys. We've done soil sampling over 300 square kilometers. We've got structural geological models. We've walked it with, there's over 110 kilometers of veining on the surface because it's an epithermal vein system. So that's where the gold's coming through the cracks and the faults, and the gold comes through that. And so point being on that is it looks like a very, very big gold district. Cacao, we have a resource there of 60,000 ounces. We've just drilled and come back with the opening. So what you're looking for on the exploration side is the structure is a wide opening, and that was 15 meters at 4 grams. So that's a success. Just that one hole is enough to justify that drilling on Cacao. And it looks like it's a buried deposit of another 500,000 to 1 million ounces. So we're just trying to show that, and then we're trying to demonstrate the strike length of that's about 3,000 meters. So is that the next Landia vein? Well, on Landia, we have 1.3 million ounces. Is this another one? Because that changes the project if you can find the next Landia vein.
But that's the point. That's what I'm absolutely. That's what I want to get to, because the underground component down towards the southeast is a different animal from the open pit stuff up, to obviously to the west and northwest of that. So what are the quick wins? You talk about being able to add another 900,000 ounces. What's the cost of doing it? What's the timing of that? Because you going and talking to the market about a 2 million ounce actually 2 million ounce project is significantly more interesting than talking about the potential of a 5 million ounce district at some point, sometime in the future.
Yeah, now we've got 2.4 million, as you say, at the moment. I don't think we'll be adding lots of open pit ounces. But you don't know. Let's be clear. I want to be clear. We've got 1.12 open pit. The majority, 80% of that, which is in the M&I category, and you've got 1.2 million underground, which is 3/4 inferred. So there's 25% of it is measured and indicated. I'm trying to get to. I want you to show me genuinely what's the quick win to get to 2 million of M&I, because that is where banks get really interested and the funding gets a little bit easier and it gets a little bit cheaper too. We're not planning to do that in the short term over the next 2 years. So
okay,
it might be what you think. That's not what we're going to do.
Okay, so you're going to focus on producing cash.
What precisely? We like cash, and so we have fully diluted mill feed, and there's a slide on the presentation which you would have read. Out of those 3 fully permitted pits of 8.5 million tons. Now, if we do 1 million tons a year, 1 million tons a year, that's an 8-year mine life. Very simple. And there you are. There's your 100,000 ounces of gold a year, just out of that. Well, 100,000 ounces of gold a year at 1,700 gold's $170 million. It's not to be sneezed at. If that's 700 all in sustaining, you've got $100 million of free cash flow a year. So that's not to be sniffed at. Do the banks want to lend on double that? Because that's what you're saying. Take your measured and indicated and double it. I think it's a very good project on what it is. And once we have that kind of cash flow coming out in the first couple of years, that's the time to go and double your measure and indicate and let the banks get excited about that. I'm not running this for the banks. I'm running it for the shareholders. And you can look at companies like K92 Mining. Results are out today, $1.7 billion market cap, Q2 production, 25,000 ounces. That's what we can do. And that's an epithermal vein system. So it doesn't have to be this Canadian psychology, if I could put it, I'll blame it on them and the bankers, that we've actually got to make this a 250,000 ounce producer day one or 200. Well, good luck to them. But in frontier markets like Nicaragua, I would say who wants to put up a $400 million project there? Because that will be your capex on that size. Will they even lend it? You're better off putting up something for 100 million, getting going, prove you can build it, prove you can operate it, and then double that production to your 200,000 in year 3. That is really the strategy. That creates the value without diluting the hell out of the shareholders, of which we directors own 22%.